Alright, thank you guys for tuning into today's live stream. It is July 3rd, 2025. Happy early 4th of July. To begin today's live stream, I do want to take a look at the economic calendar here for today. So we have average hourly earnings. We have non-farm employment change, unemployment rate, unemployment claims, and various other news. I think the two main one that I'm looking towards for today is the non-farm employment change and unemployment rate, as that is the most crucial labor market indicator that we have. It just shows us a good or I guess a good overview of what the labor market is like. Based on the survey, it seems that there has been 147,000 jobs, or 147,000 employed people this past month, and unemployment rate seems to be at a calm 4.1%, lower than the previous month and lower than the forecasted. With these two surveys coming out, it backs the idea of a strong labor market, and this could affect, the Federal Reserve and how they are going to, it affects their choices of either cutting interest rates or hiking interest rates. And the fact that the labor market's pretty strong right now, this could cause the Feds to continue to take a wait and see approach, with the fact that these rates with these surveys that the labor market's pretty strong. So here, it's pretty interesting, right? So this would be good news for the market. And yeah, I mean, whenever we opened up during that time, we ended up taking out previous month's high here on NQ and are continuing to make new all-time highs here right now. So we just took out previous month's high, so the monthly objective did get completed. And yeah, we are now making new all-time highs here on NQ. Let's take a look at what's happening here on ES. ES also just made new all-time highs. Very interesting. And I mean, overall, we're pretty bullish. I like the fact that we are making new all-time highs. Shows that, we are pretty bullish. And yeah, so I do want to go back to the monthly time frame here with you guys. So I have been, suggesting that over the past week or so, that the way that we closed here on the monthly candle of, yeah, bye bye. With the way that we closed here on, yes, yeah. With the way that we closed here on this monthly candle, you can assume that we are most likely going to take out the monthly high, right? This is the monthly high right here. And let's go back to, all right, so this is exactly how we closed here on the monthly candle of June, right? It's a pretty bullish closure. You can make the assumption that we should take out the monthly high. And yeah, so this upcoming monthly candle here, so based on the way that we closed here on June, you can make the assumption that, hey, we should open up on July, open, and then manipulate lower, and then take out June's high. That's what I was hoping for coming into this month. And that's exactly what we did. So here we came into the month of July. We manipulated lower first, and we expanded higher towards the monthly high, which is my monthly objective. And so once my monthly objective gets completed, there's really nothing else for me to do on the monthly time frame, right? I can't force anything else to happen here on the monthly time frame. So coming into today, my best choice of action is to use the intraday time frames. Notice how we have, like I stated before, we have already completed the monthly objective. We have completed the weekly objective here, which was the weekly high. We also completed the daily objective, which was the daily high right here. And yeah, so coming into this morning session today, my best approach, like I said, is to use the intraday time frames, such as using the 4-hour candle and how the 4-hour candle is going to close, utilizing the 6-hour candle, utilizing the 8-hour, the 10-hour, even the 1-hour time frame. So I'm able to apply this same idea of basically a open, high, low close on every single time frame. Time is fractal, price is fractal. So these concepts can be applied to various time frames, right? So just apply the same approach here, like the approach that I just briefly went over, how with the way that we close bullish here, right, and its closure is really close to the high based on the monthly candle, the next monthly candle, you can make the assumption that, hey, we should take out this monthly high here. And so that's literally that's all that I'm doing, is looking back on previous candle and making an assumption based off of how we closed. I'm not taking a trade from that I'm not taking a trade simply because of that concept. It is the first thing that I look for before I execute. However, though, there are two other components that I look for whenever I do enter a trade, but this is the first kind of main concept, is how did we close? Is it a bullish closure? Is it easy to make an assumption that we should take out the monthly high or whatever high or low of the candle, right? If we close bearish, then you'll be targeting, the idea is that if you close bearish on a candle, then the very next candle, should take out the previous candle's low. And if you can kind of structure a trade based off of that idea, then you're going to have an understanding of where prices wants to go until that objective gets completed. And essentially that's all that I'm doing, right? And yeah, so this is the 12-month candle. Interesting. But yeah, so like I said, coming into today, I'm going to be utilizing how we close here on this candle, 4-hour candle, 8-hour candle, for the morning objective here, for the morning session. And yeah, so it is looking pretty bullish right now with the way that we are closing here on the 4-hour time frame. and the 8 hour time frame, it is bullish. So that means within the next 4 hours, within the next 8 hours, we should take out their respective objectives. So that means I would be targeting, you know, the 4 hour high and the 8 hour high. And yeah, so pretty much that's entirely all of the, I wouldn't say that's all of the strategy, but that makes up a lot of how I view price. It's a simple, very, very simple approach. There's really not much to it. And yeah, we have about 3 minutes or so until the candle closure, until the 4 hour candle closure and the 8 hour candle closure. Until then, I would just wait. I'm not gonna really force anything, and just sit on my hands until we close. If we take out the 4 hour high and the 8 hour high, whenever we do open, without giving me a opportunity to be a part of the move, then I'm not going to force anything, right? If the 4 hour candle and the 8 hour candle close bullish, but I'm not given a entry pattern, I'm not given a model for me to align myself with the time frame or with the order flow, right? Then I'm not going to force a trade. I'm not going to enter a trade simply off of the whim that we should take out the 4 hour high and the 8 hour high. It is most possible that we should take out the 4 hour high and the 8 hour high if we were to close right now. But I wouldn't simply force a trade to happen because of that idea. It is against my strategy. And one key component to my strategy is I require 3 components. I require 3 concepts almost for me to really take a trade. That involves the higher time frame objective, a model, and an entry pattern. Those are the 3 components that I look for. Higher time frame objective being the bigger reason for why I want to see prices continue in a specific direction. So that could be like the weekly time frame, that could be the daily time frame, that could be the 4 hour time frame. But your model has to be on a time frame that's lower respective to the higher time frame objective. So if my higher time frame objective was based on the weekly time frame, then my model has to be on a time frame that's lower respective to it. So it could be on the daily time frame. And the daily time frame should support the idea of whatever direction the higher time frame order flow is. If the higher time frame order flow is bullish, then my model should be bullish. It should also be suggesting the same idea, which is, in this example, higher prices. So here, about 30 seconds left until we close on the 4 hour candle and the 8 hour candle. Watch very closely to how we close. And yeah, so like I said, the way that we close right now, that we are closing, pretty bullish. Keep in mind that the 4 hour high is the same high as the 15-minute high. Because of that fact, that means we should take out the 4 hour objective within the next 15 minutes. Let's take a look. As soon as we open here on the 4 hour candle, this is the 4 hour open, by the way, that black line. As soon as we open, we took out the 4 hour high. I know it's a small range from the 4 hour closing price and the 4-hour high. But the fact that you can leverage makes this so much stronger, right? And yeah, so that's just something that I have been really paying, like that's something that I'm paying close attention to, right? Was the high. As soon as we opened, we took out the high. What does that mean for me coming into the morning session now? I am not going to utilize the 4-hour time frame. I'm not going to utilize the 8-hour time frame anymore until we close and create a new 4-hour candle and 8-hour candle. So for me coming into the morning session today, I'm going to have to pivot. I'm going to have to pivot from different time frames. Like I stated before, because I can't utilize the 4-hour time frame and the 8-hour time frame, I would now decide to utilize the hourly time frame, the 30-minute time frame, the 15-minute time frame, the 6-hour time frame once it closes here at 12 p.m. Central Time. So with every single candle closure, there will be a new objective for that specific time frame at least, right? And yeah, so that's kind of where I am now, right? I had a feeling that we weren't going to be given a opportunity to be a part of the trade, and you know, that's completely fine. And yeah, so that's all of that. That's all that I have for at least for a bias coming for the morning session right now. I would wait until new candle closures until I force a idea onto prices. Now, yeah, I mean, it's just really a wait and see approach. Very patient. No need for me to force anything. And I mean, this bullish move up higher here, I mean, right? I think the fact, I mean, the markets like the idea that we are strong in employment. And so that's just a bullish indicator. Let's see. Anything else that I want to mention? Nothing really. Yeah, so yeah, I'll just leave it like that as that for now. That's all of my morning objective coming into now. I'll just briefly go over some of the pros and cons here with you guys and call it a day. The first pro that I really want to mention is to take consistent setups. I briefly went over this, but being consistent is a core value of mine. It requires me to have a higher time frame objective, a model, and an entry pattern. Those three things have to always be present before I execute. I always imagine it like if someone were to ask me, why did I take this trade? These three components will be the first things that I list, that I tell them. It makes it really simple. It like if there's 2 out of the 3, I'm not taking the trade. If there's 1 out of the 3, I'm not taking the trade. If there's 0 out of the 3 components, I'm not taking the trade. But if there's 3 out of 3, then I'll consider it with also SMT in mind. But yeah, so that's the first pro, is just to be consistent. Second, paying close attention to SMT. Notice how NQ, we have made new all-time highs. ES, We have also made new all-time highs. So there's really not much SMT right now. And I like the fact that there is no SMT. And yeah, I mean, that's pretty much it. If the key thing to take from this is that if there is SMT, then there's a potential reversal in play. But if there is no SMT, that means there is a possible continuation, right? Prices, a strong swing high and a strong swing low will always have SMT. If there is, like I stated, if there's lack of SMT, that means you can anticipate a continuation, vice versa. That brings us to the third pro, to utilize every single time frame to your toolbox. Every single time frame has its own objective, meaning time is fractal. So you can apply these different concepts that I'm introducing to every single time frame using the power of three, using the fact that if the candle closes bullish, then it's highly probable that we should take out that specific candle's high. If the candle closes bullish, then it's a high possibility that we should take out that specific candle's low. Very simple approach. It makes for easy biases, but that doesn't equate to a trade to occur. Fourth, and probably one of the most crucial aspects here, the most crucial pro, is to be patient. You don't want to force any trades to happen. You don't want to enter a trade that you would regret, right? The fact that you have a strategy means that you have to implement it. And if you fail to implement it, that means you're not a trader at all. You're just a gambler. A trader is someone that is able to stick to his strategy, and that is someone that is unaffected by price movement. All he's doing is executing. There's no emotions in play. I mean, you're able to control your emotions and see things for what they are. I had to really struggle with this very perspective. Emotions were, for me, whenever I first started, it was really hard to control my emotions during a trade. And even after and before, there would be times where I would be really excited to enter. There would be times where I would feel really anxious whenever in a trade. And there will be times where I'll be extremely happy if the trade turns out my way. There will be times where I would feel extremely frustrated simply because of an outcome. That is not how you want to approach this endeavor, and that is not how you want to approach life, to be honest. The only thing that you should focus on, and that the only thing that you should really give your energy towards, is if you can execute on your strategy and really just focusing on the process of selecting a trade, the process of working through the markets in the view of your strategy and how you interpret price. Once you can combine all of the concepts that you resonate with and that you understand, and you can apply that and create an edge for yourself, and you can actually implement the edge, that brings you to a state where you should be invincible. Like, not invincible, but you'll be really in the flow. You're not in contact with the outcome at all. The only thing that you're really focused on is how you execute. And that's essentially all of the pros and cons. The cons that I have to my right side is just systematic risk to reward framework, and you can just note that down. To really just summarize everything, take consistent trades. Watch for the relationship between NQ and ES. Their relationship shows you when there has been SMT and when there's not been SMT. Third, be calm, be patient, execute on your strategy, and control your emotions. I'm not going to state that you shouldn't feel emotion, because we're human. That is what makes us human. But you should be able to control it. You shouldn't act simply based off of emotion. You should act based off of objective data. The last thing here that I want to go over is for me to track every single one of my setups, every single one of my trades throughout this 10K journey. And I'll go over the very first trade that I took here on my journey. I've only taken 2 trades so far, which is pretty interesting. But to go over it, this is the very first trade that I took. The higher time frame objective is based off of the weekly time frame. So this is the weekly candle here. Notice that we closed bullish. The way that we closed here on this weekly candle is bullish. And so within the next weekly candle, within the next week, I would be targeting the weekly high. And so that gives me a bullish bias. The way that I align myself with the higher time frame order flow is by going onto a lower time frame relative to that higher time frame objective and finding a way to align myself with that. And so going from the weekly time frame, I go into the daily time frame, and I notice, hey, this daily candle right here is bullish. With the way that we close in the daily time frame, I can make the assumption that, hey, we should take out this daily high within the next day. So that kind of gives me a structure of a trade, right? That gives me higher time frame objective. That gives me a model. The only thing left is a entry pattern. And so I go onto the intraday time frames. I go from the daily, and now I'm going from the daily onto the 10 hour. I'm going from the daily onto the 8 hour. Most importantly here, my entry pattern of choice is the 10 hour fair value gap. Notice how these are 10 hour candles, by the way. It's an indicator, but there's a 10 hour fair value gap right here. This 10 hour fair value gap supports the idea of higher prices. So once prices trades into this inefficiency, we should respect this inefficiency to expand higher towards previous day high and expand higher towards previous week's high. And so here's the execution. We rebalance into this 10 hour fair value gap. We show respect to it, and then we slowly start moving higher towards the previous day high. That's where I took my exits. I was in this trade with one contract, and I noticed during the time that we took out this previous day high here, we had not taken out previous day high on ES. So that means that there's SMT that occurred. We took out previous day higher on NQ and we failed to do so on ES. That means there's SMT. Because there's SMT, that means there's a possible reversal at that point in time. And that's kind of why I took my contracts off there. And yeah, risk to rewards and the details here. So I was risking $1 to make $1.12 at the daily high. Overall, I was aiming for $1. I was aiming for $1.75, and I was risking $1 to at the weekly highs. Total risk was $178. Total reward, what I actually made, or without fees, is 199.5. The total amount of ticks that I was able to gain from this is 399 ticks. Number of contracts going into this trade is 1 contract. Net profit, net loss turns out to be about $187.18 with fees, and that brings the account total to $10,187.18. That's the very first execution. Hopefully that example is kind of able to show you guys how I interpret price and how those 3 components kind of mesh together. If there's one thing that you should take away from this live stream, it's that there are 3 things that I look for a trade: higher time frame objective, model, entry pattern. That's it. Thank you guys so much for tuning into today's live stream. Happy early 4th of July again. And tomorrow, I don't think I'll be streaming. It is a bank holiday tomorrow, and I'm not gonna try to force anything during a bank holiday. And